problem comes in is with a lot of these bigger companies like My Forex Funds perpetuating the idea that when the client wins, they win. In most cases, that's not the case. In most cases, they're betting against the client, and that's where the slippage part comes in. That's where the manipulation of the spreads, etc., comes in.
I mean, I suppose let's call them the authorities. They need to make a decision on what is deemed as acceptable. I mean, what I'd hate to see is for them to say this is a Ponzi scheme. Everyone's putting money in, and there's only a few people that are making the money from the people putting it in at the bottom.
Right, welcome everybody to a brand new episode of the Fair Value Podcast. Today I have a guest that a lot of you will be familiar with. You've seen him most likely on YouTube somewhere before. He's been in this game for quite a long time. It's kind of weird. The interviewer becomes the interviewee. So once again, I mean, we had words of wisdom, and now today we have a legendary trading podcaster, Cam Hawkins from Trading Nut. Welcome, man. Welcome to our podcast. Thanks for being here.
Great to be here and on the other side of the mic for the first time in a while.
Yeah. Welcome. It's going to be interesting to find out, what makes your show tick and how it sort of started getting going in the beginning. And I think a lot of people want to know about that because there's a lot of viewers of my channel that essentially came from your channel firstly, because the episode that I did with you was pretty epic, if I may say so myself. It got a good response. The response I got from that was amazing. I think there's a lot of the people that watch Trading Nut are just super devoted, and I think it's just because of the years that you've been. How many years have you been doing this now?
Oh, I need to work it out. What's the 2023? I think I started. Yeah, right? It's about 8. It's about 8 years. So I started back in I think it was 2015, was it? Yeah, it must have been 2015. So that's 5 plus 3. Yeah, that's 8 years. So it was. I mean, I didn't necessarily start my whole trading journey then. I sort of started that way back in, I think probably 15, 16 years ago, and stumbled into it. I can't even remember the exact date, but it would have been around about 2007, maybe just before the GFC, maybe 2006, something like that.
Okay.
And I ended up meeting a guy who, I was playing golf with some guys. I'm heavily hungover up in Auckland, and it was guys who were working for Ogilvy, the advertising firm, and I was working for a bank at the time, and they taken us on a game of golf and told me about the guy who was my prior account manager at the very end of the golf game, and they said, "Oh, yeah, he's gone on to make $500,000 in 6 months trading the E-mini futures." And I was like, "What? This sounds like something I need to find out how he did." So I ended up sending a few emails, got some courses come through from him, and he sort of said, "Yeah, here are the courses I did," and they're all huge, highly expensive, sort of over $5,000 a course, or it was like a 3-day seminar kind of thing. So I was like, man, this is sort of way too rich for me. There was one that was $1,000, and I thought, okay, well, I can probably afford that one at the time. So I took that, spent 3 months studying it, and it was like options trading stocks on the Aussie stock market. And it took me about another 3 to 6 months to get a broker account set up. It was ridiculous. Back then, there was no online join the broker kind of stuff. It just took forever. And I finally got that, finally had to place my first option trade. And it was like, you had to risk $1,000 on your very first trade, which was, kind of daunting when you've, just going, oh, I'm lucky if I put $1,000 in, for the course. Now I've got to put another grand in for the trade. And, put it this way, you sort of freak out straight away. And so freaked out. I think I lost $300 on that trade. And I was like, man, I don't know if I really want to risk $1,000 per trade. And then I ended up finding out about Forex. And then I was like, oh, hang on a sec, you can risk like $10 a trade here or even less. So I was like, oh, let's go into that space. So that's where I sort of found Forex and started doing all the wrong things, which I've carried on doing for many years. So that's sort of the start of the journey. And it's a long story up to the point where I started the podcast. And I got into trading the robots, and I was doing tons of stuff around just buying commercial robots, trading them, and I was testing hundreds of them at the time. Had a website where I was reviewing them, and then I ended up canning all of that, stopped everything for about 2 years. And then I was listening to a podcast called Entrepreneurs on Fire, driving to work one day, and I'd changed my job. I wasn't working for a bank anymore. And I ended up thinking to myself, wouldn't it be great if there was a podcast for like in the trading niche? And there must have been a few other people at the same time thinking the exact same thing, because it's 3 launched literally within a month. I think one of them was Chat with Traders. The other one was the Better Systems Trader. And they all launched around about the same time, which is crazy. And anyway, so I thought, okay, is that even possible? Can I find traders to talk about? And if anything sort of, confirmed to me that there are people actually out there making money in this space, which I delved into and thought that was going to be mega hard. Everything was going to be hard. Finding traders, recording the interviews, getting them out on a regular basis. I decided to do it for a year and called it 52 traders. So it was going to be one trader a week for a year, and see if we could do that. And then after a year, I don't know what I was going to do, but that was where I ended up doing 120 odd episodes of 52 traders, where I not just I don't think I got through 120. It might have been more than that. I don't think I got through 120 traders, because some of them were like series, and there was other series in there as well. So that's how it all started. And then I eventually transitioned to Trading Nut, where I had the formula of what I was doing and interviewing traders, and everything's just evolved from there. So that's sort of it in a nutshell for the podcast.
So a lot of people ask me, what is my favorite prop firm to use? And the answer is simple. It's Blue Guardian. Blue Guardian has the best prop firm conditions of any prop firm I've used to trade with. And they allow you to take an unlimited amount of time to pass their evaluation. Not only this, but they give you the Guardian Protector, which is a tool that stops you from hitting your max daily loss. You can also set it further down to stop you from overtrading for that day. It simply cuts off your MT4 account and you can't continue to trade if you hit more than that loss. So if you want to use the prop firm that I use, click the link down below and use the code GARTRADES to get 10% off your purchase. Let's continue with the video. That's insane. You know what? It's actually very similar to how I got started. I started trading stocks and I was like, whoa, the barrier to entry here is insane. Like if you're trading with a stock broker, you literally like, you're going to need $25,000 to even get your foot in the door, unless you are, when it comes to the US patent day trading rule. So I was just like literally demo trading for a while, and I'm like, hey, maybe I can make this work and eventually get my hands on 25K. But then I discovered Forex, and I was like, whoa, okay, I could just risk $5 a trade. I think that barrier to entry is interesting. I think it's what catches a lot of people, and that's why this industry in particular is so enticing. And I think that's why it does so well. I think that's why some brokers are a little bit scammy as well. They kind of treat themselves like a casino in a way. What was the situation like back then when you first got into Forex trading? How were the platforms that you traded on versus now? I mean, we're talking like, a fair long while ago.
Ironically, it was kind of the same, right? Because MetaTrader 4 was the key player. It was it reminded me a bit like the prop firm space now, where like, it's so easy to start up an MT, like a brokerage. All you need, I think, was $1,000 investment, and you could probably start up your own MetaTrader brokerage. The regulations weren't there, and it was the Wild West, right? So there was like MT4 brokers all over the place, and some of them were like, just taking money from punters left, right, and center. This was before crypto was a thing, really. I mean, it was around, but it wasn't being used as transactions. So, I think even in New Zealand, there must have been maybe it was a hub for brokers. There was like probably about 50 brokers in New Zealand, or based in New Zealand, who were MetaTrader 4 brokers, and then the regulations came in and they all left, apart from pretty much Black Bull Markets, and I think CMC Markets is here also. So it just got rid of everyone. The regulations came in and got rid of everyone. So it's kind of like the prop firm space at the moment, where so easy to start up a prop firm. I mean, you only need a few grand and you can have your own prop firm, and or a white label of, and there's no regulations around it. So we can just see them starting to, tickle the bottom of it at the moment. And sure enough, it's probably going to go the same way as the whole MT4 broker space did in the Forex world. I mean, other things that happened, which kind of like I never jumped on the bandwagon of, and this was when I sort of lost interest back in the day, was the binary options thing kicked in. And so everyone went from like, shiny object syndrome, Forex to binary options. And it was like, wow. And then I never jumped on that bandwagon and kind of just kept on the Forex stuff. And then eventually I just like everything, I just stopped everything for a couple of years there. And yeah, but it's interesting to see, like, people just sort of jump from, oh, this thing's not working, I'll go to the next thing, and I'll go to the next thing. And the interesting thing was, at one point I did think, because crypto came on, and I did think that maybe the Forex thing just isn't going to ever be a thing again, because binary options had taken over, the crypto thing had taken over, and was there something else? I can't remember if there was the deriv kind of thing, this whole sort of derivative
Mm,
virtual in this like virtual markets,
synthetic,
synthetic
yeah.
markets are taken over as well. So I was like, is this ever going to be a thing? But here we are again in 2023, and it's still here. So it is rock solid, which is good to
Mm.
see, right?
Yeah. Well, it's interesting you mentioned the whole prop firm thing happening right now. It's quite a hot topic. I mean, literally, you can't go on Twitter without seeing any of it's literally all people talk about. And I think it's just because the idea of prop firms, for me, it changed the game for me. And I think it changed the game for a lot of people. It gives you access to something that you otherwise wouldn't be able to get. And now, with obviously one of the biggest prop firms being exposed as essentially pretty dodgy. I mean, there's not a lot of ways that you could look at it that they come out clean. And I can understand to some degree how they fell into that. But I think that in a lot of ways, it's kind of broken down a lot of the trust that people had in prop firms, and the current market. I think that it's going to change everything. But I think it's essentially going to be like what you said with regulated brokers, where brokers now either have to get regulated or they need to go somewhere offshore and figure something out. What's your take on this whole fiasco?
Oh, look, I mean, I've sort of thought, long and hard about it, and I mean, there was a couple. Initially, my early thoughts were like, the authorities have obviously decided that, hey, let's shake this industry up, because we know it's getting out of control. And what better message can we send other than rather than, what better message can we send um, than going for the big boy, right? Going for probably one of the top
Mm,
three in terms of size prop firms, and really going, hey, look, we're going to just go after you, and there's going to be a big stir. All these people that are out there thinking that they're going to create a prop firm, influencers, etc., are now going to think probably 3 times, if not 4 times, instead of twice, that this may not be the best thing or best move to make. It also is probably going to slim down. I'm thinking going forward, it's probably going to slim down the industry in terms of, the guys that are doing what they're doing may change what they're doing somehow. So, for example, like, if anyone else has been doing some of this stuff, I don't know. I'm just saying, if they have been, they might need to rethink it, which means the products may need to shift to try and accommodate going back to I suppose, a more traditional model, or less, obviously not trying to pull a wool out from, or rug pull clients' money, etc. So, I mean, like, it goes. I mean, it goes kind of deep. Like, when you look at, I mean, I saw an email today that had been sent, where they're talking about, changing the slippage size for different lot sizes, which is, I mean, whether or not brokers who are regulated can do that. I mean, I'm not 100% sure, but I know that you do get different slippage for different lot sizes, right? Because if you're going to put on a higher lot sized trade, then your slippage will be different. That said, when you're trading a demo account, there shouldn't be any reason for you to slip a demo account, unless they're trying to replicate what people are going to get on a live environment, because they're going to need to copy the trades. So it sort of goes really deep. And so I think, like, looking at it from a surface level, you might potentially get it wrong. Like, just from what you're seeing
mm,
and the hype and what everyone's saying, you might get it wrong, and it might be that what they've actually done is stuff that sounds kind of dodgy, but may actually not be dodgy. And but whether or not they can prove that in court or wherever they go, I mean, it's yet
mm,
to be seen. And I'm thinking that um it's probably not looking good for them. And
Hmm.
it's definitely going to shake up the whole industry. Like, so, the guys that are, I mean, I do know of like a number of people that were thinking, oh, I'm just going to start up a prop firm and happy days,
Hmm.
the money's going to come flowing in. I think they'll be thinking twice about it now because it is obviously on the radar of the authorities. Whether or not that impacts like a lot of other firms in the US, I don't know. Um, but also, for the trader, I suppose you go to sort of the guys who've gone through the process, they've got funding, they may be a VIP client there, or they may have been like had 500,000 or seven figures in funding, if that's even possible. I don't even know. But they now back at square one, right? And you'd like to think that they're able to sort of take that information that hey, look, I have been in this position to another prop firm and say, do you want to put me on the books without me going through the 30-day challenge? I mean, what do you reckon about that? Do you think that'll be something that other firms would accept as a sort of way
No,
forward going? And the question is why? Why would they not accept that?
because of the business model, and that's the whole problem, and that's one of the biggest pillars that has crumbled with this whole investigation, and that's purely because 90% of these prop firms, or they're not really prop firms because real prop firms operate completely differently to this, but essentially funding companies, like Austin Silver keeps saying, they're funding companies because they they operate, and it's a difficult, I try to figure out different analogies to explain this, but the way that a majority of them operate is essentially in more of a style of, let's say, like an insurance policy. We have a bunch of policyholders that pay their fees, and the people that claim, and in the case of an insurance policy, the misfortunate people get to claim, and the fees pay for the misfortunate person. In this case, the person that's skilled gets paid by the people that aren't skilled. And the people that aren't skilled are willing participants, okay? And this is where the problem comes in. The people that aren't skilled are coming in with the thought of, okay, I could get funded, and I see a lot of people getting funded, and I have the skill, I believe I have what it takes. They're not there, at gunpoint. But the problem comes in is with a lot of these bigger companies like My Forex Funds perpetuating the idea that when they win, when the client wins, they win. And in most cases, that's not the case. In most cases, they're betting against the client, and that's where the slippage part comes in. That's where the manipulation of the spreads, etc., comes in. And like I just made a video on this, but essentially that's the reality of the way these things work. There are clients that are A booked, okay, but they are generally, with these firms, they're going to be very few and far between. The clients that are actually getting their trades replicated to actual real accounts. And I mean, obviously they got different ways to do that, and obviously that's a part of the prop firm being profitable. But they limit that so much because they realize that that's just not that profitable because so many people fail and so many people are erratic. And so that's just how the business model works, really. The people that are profitable gets paid by the people that aren't profitable. And I was once one of the people that paid the profitable people. And now I'm on the other side for now, hopefully for a while to come. But you know what? I think that's just how it is. And that's how the market is at large as well, because when you're taking a trade, somebody else is on the other end of that trade, right? You're buying at this price, okay, and they're selling it to you at that price. And if you're the one who gets it at the better price, they're the one who's losing out. That's just how it is. So yeah, that's how I see it. But I think the biggest problem is that these companies advertised it as, hey, get funded with us, make money for us. And that's where the big fraud aspect comes in. And that's because, like My Forex Funds, I believe, I don't know for a fact, but I believe a lot of these bigger companies, they started out with the idea of, this is a prop firm where you make money for us, not we make money out of you, right? And so that's one of the big problems with this whole thing.
One good trade, the audio book. by
Mm,
Mike Bellafiore, is it? And
mm,
I mean, they had a traditional prop firm, right? And so what's the difference? The difference is that they recruit traders or recruit people they think they can turn into traders versus
mm,
traders who think they can trade trying to become a member of the prop firm. And sometimes they do, they did have traders that had traded for other firms or had some kind of experience in trading. So they weren't like completely, raw to the industry. But sometimes they recruited people straight out of college who were sports athletes, and they had the pedigree to become a good trader because of the mindset things they should have had in place because of the sporting attributes that they'd achieved during their whatever college Division 1 basketball career, etc. Now, the thing that they did was they trained these guys up, and even the guys that were part of the sort of like they come from a trading background, they still train them up in the way they wanted them to trade so that they could, and they didn't all take the same trades, right? They all took different trades, and they were looking at, they're looking at stock markets. So there's, thousands of stock markets thousands of stocks to pick from. So some of them would be trading some stocks, others would be trading others. They'd all be getting slightly different entries and slightly different prices based on whatever they're seeing and however they read the tape or read, the chart and the tape, etc. together. And I mean, the thing is that was the traditional prop firm model, which this isn't. Like these prop firms are just not that model. The firms aren't there to necessarily. I mean, some do a good job of it. Like, I think FTMO does try and, I mean, I get their emails and stuff. They do try and educate traders on what to do and what not to do, good trading practices, etc. So they are trying to educate the trader, but it's still not the same as taking you on board and go, right, I'm going to teach you how to trade. Here's how you do it. Because we're actually putting money behind you, which is what this Mike Bellafuri's firm was doing, SMC Capital, I think it was. We're putting, it's going to cost us 50K for this trader to find out whether or not he can actually trade, and it's actually going to cost the firm money. So they're willing to put that money into. So it's a completely different model, right? Completely flipped
mm,
on its head. So I mean, whoever sort of came up with the first sort of flip of the prop firm, which may have been Top Step. I know that they were one of the early ones where you could just sign up and you didn't have to sort of go into the office and have an interview and get the job. You're just like, hey, you're in. Just pay the money and you're going to get a chance to trade a 5,000. I think it was like a $5,000 account at that time. So yeah,
mm,
the industry has sort of completely changed from the tradition, and I mean, I suppose let's call them the authorities. They need to make a decision on what is deemed as acceptable. I mean, what I'd hate to see is for them to say this is a Ponzi scheme, and
mm,
everyone's putting money in, and there's only a few people that are making the money from the people that are putting it in at the bottom. And if they do, then it could be detrimental as a whole for traders, because it could essentially wipe out the majority of prop firms, if not all of them, and then send it back to the way it was. So fingers crossed it doesn't get to that point. I mean, what are your thoughts on this
mm,
whole the Ponzi scenario?
I don't think that. The thing is, a Ponzi scheme like that wouldn't be able to last as long as it has. I mean, FTMO has been going for how long now? Really, I think super long. Um, and generally, yeah, I don't believe it is, because at the end of the day, um, more is coming in than is going out, and that's the job of the prop firm, right? More fees are coming in than is going out to the profitable traders, and that's also why, I mean, Kimmel Trading talks about this a lot. These companies that come out with evaluations that are too easy to try and recruit people to pay their fees, right? Immediately that should be a red flag for you, because how are they going to sustain that long term if they're not bringing in if so many people are passing and getting payouts because of their easier evaluations, then how are they going to be able to pay everybody out, because more is going out than is coming in through the fees? So yeah, I mean, at the end of the day, I don't believe it is. I mean, It's difficult. I mean, it would depend how it's exactly defined.
Yeah, well, that's the thing.
It's
It is
yeah,
quite, it's quite a sort of, I mean, it wouldn't
it's
be
a
a true.
gray
It's a
area.
very grey area,
Mm,
right? It's a very grey area, and I mean, you've only got to assume that there were some, some clients that were pissed off that went to the CFC and said and sent
mm,
proof of XYZ. Here's what I've done. I've recorded this. I've recorded that, and sent it in and gone. They've obviously got enough of them to go. Okay, well, let's have a look at it, and gone
mm,
right. Okay, this is enough of a case for us to go and send these guys a notice. So the problem we've got is the clients who benefit from the prop firms, the traders who will benefit in the future
mm,
or may benefit now, are sort of shooting themselves in the foot if they're going to the authorities and saying, "Hey, these guys have stitched me up and it's cost me this, and I've found this little kink in their armor." So it's kind of like people
mm,
don't see it, and I think this happened before where I can't remember where it happened. I did see this happen somewhere, and it might have been in just the MT4 broker space, and I was like, oh, that's right, yeah, it was. I think it could have been around New Zealand and the broker space here, and just too many people complained, and that's why we can't now open up accounts in like pretty
mm,
much any other country in the world. Like New Zealanders are kind of screwed for opening up brokerage accounts. So that's because people who use them and lost money and offshore brokers complain to the authorities, and the authorities go, well, let's look into this. Okay, let's put a blanket rule. You can't do it. So the irony is the people that get into trading and do that are kind of not just ruining it for themselves, but ruining it for everyone else as well. So, I mean,
mm,
and that seems to be the cycle of human nature, and we're now just seeing it come into the prop firm space. Which is a shame. Which is a shame. But
mm,
it's good to weed out the people that are not doing or are not don't have the client's interest at heart, but also, I mean, the downside is it's going to affect the industry as a whole and make it harder for everyone who, wants to break out of their 9 to 5, become a full-time trader. And,
mm,
they're going to be back to trying to flip accounts and, in 5, 10 years. Let's hope. I mean, they're probably not going to be, but let's hope it doesn't get back to that.
mm.
Mm.
It's
It's
interesting.
interesting. I believe the reason that this all happened is just because of the sheer volume of money that was changing hands with companies like My Forex Funds. And when it comes to like the Canadian regulatory bodies, the US regulatory bodies, I think that they're hyper intensely focused on uh, nailing down these companies that are turning over such high amounts of money. They're going to immediately start raising their eyebrows and saying, "Hey, what are you doing?" Like, I think it was $300 million over the last 3 years. So essentially, I think that's enough to raise some eyebrows. And I believe the investigation was going on for like over the last year. So they really collected a lot of data. I mean, they had screenshots of employees to each other talking about how they manipulate the spreads and how they were losing too much money with a particular client and they were paying out too much. So essentially what we're going to do now is put them on a more aggressive slippage account that now.
I didn't realize
Yes.
that. Yeah, I haven't been sort of following it in that much
Yeah.
detail.
Yeah, so it's become a bit of a meme on Twitter, but essentially the one employee said to the other, "We're going to put him on the account on the more aggressive account and slip them to hell." So there's a meme now where everybody's like, "We're going to just slip them to hell," and that's become like a catchphrase. It's quite funny. Well, it's funny and it's not funny, but you know what I mean? I think it's interesting. They got all of this dirt on them, and that's why it looks really, really bad. Because so the big issue is that they had their own broker, right? So they had Traders Global. Now, Traders Global Group, which is what My Forex Funds ran, they ran their own broker. It was unregulated. And it was an unregulated broker running in the US and Canada. There's a Traders Global Canada and a Traders Global US. And that's just completely illegal because they.
Yeah, that's just
Yes.
what are you doing? What are you doing?
Yes. So they've got this unregulated broker, which again, that's kind of like, hey, I'm driving without my driver's license. Like, obviously, if you get pulled over, you're screwed. Like, that's just dumb. And that's essentially what they did. And because they were unregulated as well, it left the door open to all of this, I think. And that's why I say my conclusion is that, prop firms that are working with regulated brokers make it a lot safer for you to not have the situation of a prop firm taking advantage of their clients and manipulating them. I think that that's just the key here. And also, obviously, because a lot of people are like, oh, all these prop firms saying, oh, we're not registered in the US. We're registered in Dubai. We're registered in Europe. And everybody's like, okay, so what you're saying is that you're still going to do dodgy things, but the regulatory bodies just can't look at you, right? Are you running from authority? And that's what a lot of people have said. But obviously, I mean, that backfired on a lot of these prop firms trying to market themselves as not affected by this, but they just ended up looking suspicious. But essentially, a lot of them were just like, no, we're just saying like, you're not going to get interrupted. You know what I mean? So yeah, I think it's going to be, it's anybody's guess what's going to happen with this, but it's not looking good. I think that European companies that are registered in Europe, Dubai, they'll be fine for a while to come, but it looks like probably a similar thing to what happened in New Zealand with brokers and in the US as well with brokers, where they just kind of had to shut down. I think that's probably what's going to happen. And then US clients won't be able to get served through that. I think potentially as well, there will probably be like a really refined version of a prop firm within the US. So you're going to have a lot less leverage. Your fees are going to be a lot higher because that company is going to have to pay much more to get regulated. So, and it's going to be almost like a monopolistic kind of endeavor where it's going to just be one company, maybe two, that Americans can use. That's how I see it. Anyway.
With all the goings on here than me. I mean, I literally sort of saw the message that they'd put up and that was what I was going on, and then I saw one other message and I read the article, but it sounds like you've gone way deeper than me. So it's interesting. I didn't realize that broker was unregulated. I knew it was theirs, but yeah, that's just a kind of like you're just breaking the law at that point. Yeah, so I mean, so I was going to say it's interesting. Like, I mean, I've got guys doing the prop challenges at the moment on the channel, and including myself. And it's. I mean, I've had guys that have passed challenges before, got funded before, made withdrawals before, who will fail the challenge, and it's the Blue Guardian challenges, which is kind of pretty easy because there's no time limit and the rules are fairly flexible. Why do you think it's so hard for to make trading work in even for people that have been successful in the past?
Well, so there's two different scenarios. There's the new trader who's coming in, who's putting a lot of pressure on themselves to succeed. So that's most likely the reason that they are failing, just the pure amount of pressure. I mean, it's when you're looking at this mountain that you have to climb and you're looking at it from the bottom, it's really, really, in comparison to where you are, it's really high and daunting because you've never been up there before. But if you've been up there before, it makes it a little bit easier. You've climbed the mountain, you know the tribulations that come with it. You had a hard time, so the second time is going to probably be easier. That doesn't necessarily mean that you're going to make it every single time. And in some respects, the people that fail, even though they've made withdrawals and past challenges multiple times, myself included, those of us that still fail, which you still will, it's not like you just suddenly get it and now it works. However, now with unlimited time limit, you have less of an excuse. Because you don't need to be so aggressive because, for example, not every month is going to be an 8% month, but now you've got unlimited time, right? You don't have 30 days anymore. So your excuses are more limited. But what a lot of traders do, myself included, we're a lot more aggressive with our evaluations, just purely out of a time thing. I'm not going to spend 2 or 3 months trying to pass. I'm just not. But that's because I have other accounts. I have backups. I have, like a financial safety net. I have, money in the bank. So I'm not as worried as somebody who's coming out of it trying to quit their 9 to 5 job, and they're trying to get funded. They're maybe going to take their time. I'm not. Just purely because I can fail 3 before I get 1, because it's worth it for me. Because once I get the 1, I know I'm pretty much guaranteed to get some withdrawals, get my fees back, and then continue to withdraw from that consistently, because I know I can make 1 or 2% a month, and that's really all you need, between 2 to 4%. And that's just all I go for. I think that failure is pretty much inevitable in this game. And that's the thing with prop firms. Failure doesn't mean that you've lost a ton of money, right? It just means you've lost your fee. And that's the whole thing that I like about it. Whereas if we were starting from scratch with no prop firms, you're putting a lot of money on the line every time you fund an account. If you want to make a significant amount of money, you're going to have to put a lot of money on the line. But with prop firms, that's not necessarily true. Yeah.
Might be that you do, you could potentially, if you sort of kept the risk at a similar level with the leverage that you've got available through it for a broker, you may essentially just be reducing the time, albeit the risk will still stay high. So whereas with the prop firm, you sort of increase the time, and then the risk can drop. And what I mean there is, like, if you're doing the challenge, it's going to take you a while to get to the point where you can actually make withdrawals. But once you get the funded account, as you're saying, you can, drop the risk. So you're making 1 to 2%. Whereas if you're with a broker, let's say you start with a $500 account and your risk on the first trade is $250. So your time to withdrawal might be 1 day, but your time to refunding the account might be 3 days, because you've lost 3 trades and you've blown the account. But once you get the funded account, you've made $250. Then to get the 250 again, you're going to have to risk quite a bit of the account again. So it's kind of like a flip. It's either or, right? You're either going to be one of those 2 types of traders, somebody who wants to do that, or somebody who's willing to put the time in at the start and have more of a long-term. And I think it's the long-term thing really for the prop firm, right? Because you can keep it sustainable for a longer period of time. I mean, would you ever go back to trading personal account? Do you trade a personal account and use some of the withdrawals to trade with a personal?
So I'm going to be totally honest. I don't trade a personal account at all. I've just never found the need, firstly. And secondly, I got profitable trading prop firm accounts. For me to go back to a brokerage account, a normal brokerage account, would be going backwards. I believe the only way I would start trading a private account is if I funded a significant amount into a private account and then just risked 0.5% to 1% per trade and just built it up and compounded it over time. That's the only way I would be able to do that, because essentially, in order to take advantage of that opportunity the same way you would as a prop firm, taking $500, for example, that would have been your fee to pass a 100K account. That, if you think about it, the amount of profit you end up making once you're funded is, how much are you going to need to flip that account to have enough equity to make a few $1,000s on that account? It's insane. So if you think about it, like, for example, that $500, you're going to need to flip it quite a bit. Like, for example, there's 2 phases in your challenge, right? You need to make 8%, and then you need to make 5%. So that's 13%. Now, how much more are you going to need to flip that account with that 13 risk reward, essentially, is what we're dealing with. Even if you're risking 5 to 10%, you're only going to be able to double, essentially, that, if you're lucky, double that $500. Then you got $1,000. You're still not going to be able to make thousands of dollars per month. even though you've flexed the hell out of that account.
Yeah, it
So
is. It's high risk, and I mean that's where obviously the benefits of these firms come in.
Yeah, it's interesting. I want to pivot a little bit to Trading Nut, because I'm very interested to know what does your typical day of running Trading Nut look like? What's your routine like on a busy day of running Trading Nut? And is Trading Nut like the only thing you do? I mean, obviously you're trading. Is Trading Nut your main focus? Do you have other side like investments and businesses that you also run?
No, oh, so okay. Well, let's sort of. It's probably better if I give you a week at Trading Nut.
mm,
What a typical week, right? So typically, Monday's a busy day, Tuesday's kind of busy, and then the week tapers off. So I mean,
mm, mm,
I've got a couple of kids, I've got a wife, um, kind of a busy life. So I like to have a bit of time. I've got stuff to do outside of Trading Nut. So Monday, I'll decide on what episode is going to go live for the week, and what I've worked out the best way to, because I never like listening to my episodes again. I've always hated
mm.
doing it. I've tried to get other people to listen to it and come up with quotes and stuff, and it's just one of those things. I just don't like doing it, but I found out a way to do it, which is I go on a walk with my phone with the episode downloaded, and when I get a quote, I just take a screenshot of the phone and it records the time that happened, right? So I go on like a 45-minute walk, listen to the whole episode, take the screenshots, come back, and then I'll just go through the screenshots, note them down, and then go to those parts of the show when I'm at my desk, and then I will, record that. I'm taking note of what was the quote. Okay, was it a good one? How can I sort of piece it together? And then I will, So that's one thing I'll do. I'll schedule a live stream. So we've got at the moment, we're having about 10 live streams a week on the show. So that's only like 25 minutes to do that. And then we use StreamYard for that. So it's like nice and easy. The guys go in and manage their own streams. You've done it yourself. So that's trading the live session, the live actual sessions, which is kind of cool. The And then I do a Robot Lab live call once a week on a Tuesday morning for me. So I'll send out an invite for that. So that's like Tuesday morning for an hour and a half. We'll go in and build a robot. We'll piece it together. So over the course of maybe, sometimes they take 3 weeks, sometimes they take, I think the longest has been maybe 10, 15 weeks to build out a strategy, test it, either get it onto a demo account or get onto a live account. So that's what we do there. The MetaTrader 4, MetaTrader 5, and people can see me actually building these bots live on the screen, and we work through debugging and all this sort of stuff. You'll be surprised at how much we actually get through in an hour and a half. Pretty much the bulk of the strategy is done in the first hour and a half, and then the refinements just happen over time. So that's what I do on a Tuesday morning. And then I usually have a call, or I go out and reach out to guests who can, potential guests like yourself, and say, hey, look, I'm looking for a guest to come on the podcast, trying to find traders who can be, I mean, I've got better with this over the years, but it can be a bit of a pain to try and find good traders. So it's becoming easier now that people have got prop firm accounts and they're able to show that they've been funded and they're making withdrawals. Whereas before with the broker, I mean, trust me, like, I don't know why this is the case, but I will get, no word of a lie, 20 people will reach out to me and say, hey, can I come on the show? I'll go, yep, fill in this form. You got to provide 6 months worth of proof that, account statement for 6 months. As soon as I say that, never hear from them again. Right. And it's like, well, hang on, so why did you want to come on the show if you haven't got 6 months worth of proof? I mean, come on. Or it's like, oh yeah, but I've only got like 2 months because my accounts are all like screwy and blah blah blah, and all. There's always an excuse, right? And I'll get 1 out of 20 people can actually show 6 months worth of consistent proof that they've actually made money trading. So it's that sort of like weeds out a lot of people, and then recommendations and stuff. You can sort of work out who can trade and who can't. So 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 I'll do an interview, maybe 2 or 3 interviews a week, sometimes one, sometimes none. It depends on whatever backlog I've got. And then on a Wednesday, what I do is I put all my stuff into a spreadsheet for the videos that are dropping. So we've also got the Blue Guardian challenge. So we're getting guys sending me videos across the weekends for a video that gets done on Monday. I'll record like a little intro, a little outro, just as I'm doing now. And what else do I do? Oh, and then on Wednesday night, I will release the episode after I've got a guy that works for me that does the editing. He puts it all together. I'll just go in and review everything and release it, schedule a few bits of social media, and job done. So it's like Wednesday night, Monday morning, let's say Monday, Tuesday. Tuesday's pretty busy, and then we're Wednesday starts to ease off. Now, what do I do outside of that when all this free time I've got? You'd think that it would be like, hey, this guy's got the cruisiest life ever. He can just do whatever. I mean, Saturday and Sunday, I do try and keep to myself, but I do tend to do like maybe let's say 2 hours work in the morning on a Saturday and a Sunday, maybe sometimes more, depending what I'm doing. Usually, I'm building out algos. So either ideas that I've got a trading mentor who nobody knows. Like he's not on the show. He's a guy that just reached out to me. He's taught me an awful lot about the markets. I mean, I know. I mean, I can. The funny thing is, right? It is the whole mindset thing because I do know how to read price very well, right? Extremely well, but putting that into practice is the hard part, and it's in a way that it's hard to explain because I mean, for example, if you showed me a trade setup that didn't work, I could give you a reason that didn't work. And I can see guys taking trades on my stream, for example, and I'm like going, that ain't gonna work. And sure enough, it hits stop loss. And so it's at a level that you really get a good understanding of price, but on the flip side, you've almost got too much of it, and you've got to try and make it your own. Which I mean, like let's just put it this way, okay? Like so, in the last, so I what I tend to do because it's I always want more, right? And I always want something that fits with me, fits with my lifestyle. And that's part of the issue I've got with my trading, right? So I'll have a good week. I mean, I passed funding challenges before, either like with manual trading, with bots, and growing in accounts. But I tend to have like a weak yip. Like I get the yips after a week. So I'll have a really good week, and then the weekend break just destroys me. And the next week I'm like, oh, like, how am I going to back up the second week kind of thing? And it's always a second week for whatever reason. I don't know what it is, just some psychological thing. I just managed to screw it up. And it just like, and it's like either I make mistakes or it's like just the setups aren't working or I change something ever so slightly. This starts to deviate from what I was doing the week prior. And inevitably, like it's either I'll see something else and go, well, that looks pretty good. Why don't I back test that based on the overall tranche of knowledge that I've got, which is not really, let's call it, it's not ICT, it's not smart money concepts, it's not like rally based rally, it's not supply and demand, it's not trend lines, none of this sort of stuff. The stuff that this guy's taught me is quite different. So and the problem is I've got such an arsenal of knowledge, I can pull on all of it, but by doing that, it's like, it's that Bruce Lee saying, or I don't know who's saying it was, you're a, it's like, I can't remember the saying, you're a master of, don't be a master of like 1,000 things, be a master of one kind of thing. I don't know, what's the quote? Do you know the quote?
Yeah.
If you're a jack of all trades, you're a master of none.
Yeah, that's correct. Yeah, that's the one. Yeah, jack of all trades, master of none. So it's like I've got so much in the arsenal there. So, for example, like I'll give you this last 2 weeks of my trading just so that you can get a feel for it. And look, it's all documented there on Trading Nut on the Blue Guardian recap. So if you do want to go and see it, you can go and check it out. So the week 2 weeks ago, so I had a profitable week. I came out and I was trading the strategy I've been trading for like the 2 weeks prior to that, and I'd had I was 1 hour down. I think I was like another 1 hour down the next week. Then I was half an hour up. So really, okay, I was, still going down, but a couple of small tweaks in that half an hour actually would have been probably got me back to break even. Didn't, and that's just the way it is. But then I was like, you know what? I'm sick of this small, slow growth. I want to change it up. That weekend, I back tested another approach, and I was like, I think that's actually going to get me some growth on this account. That's going to soak up some of the drawdown and get me, up to, growing this Blue Guardian account again. Which, in all honesty, the bot that I started off with, started me at 3% down out of the gate within like 2 weeks. And I was like, okay, well, and that bot had grown an account on demo in about 20 days by 10%. So I was like, well, why not use this bot on the Blue Guardian account? Anyway, long story short, decided, right, I'm going to change the strategy. I'm going to go to this new strategy that I back tested. It looked good. It was multi-R, not just single R, which is what I was doing before, i.e. 1 hour profit, 1 hour loss. So the win rate seemed to be good. It was over 50%. What I hadn't counted for was the live environment. And I mean, the back test I did wasn't real-time back test. The back test I did was full chart back test, so you can see what's coming up and stuff. And I was like, okay, well, I could easily make 2R here, and I could make 1R. And the way I structured it was I could make 3R out of the 1R. Now, I'm not going to go into detail as to how I did that, but anyway, long story short, first day, profit, 2R. Thanks for coming. Happy days. A couple of other trades. One of them went to, I think, 1.5R. Didn't quite get to the target. Ended up stopping me out. Both of them stopped out at break even. Then the next day, news hit, and all my orders, and there were way too many of them, got triggered. And I think the majority of them lost. Then there was some floating. And then I think the overnight kicked in, and the Guardian Protector kicked in and stopped me out of all the trades. And so I ended up dropping 1.5% on the account. And I forgot the Guardian Protector was on because I'd started off using it with the bot. Anyway, so that strategy was like, I can't trade this anymore because I'm just completely I'm flummoxed here. I don't know what's going on this week. And I ended up placing a few trades from the old strategy. And then in the weekend, my mentor said, oh, I'll tell you what, why don't you trade this instead? This is like guaranteed. So I started trading that this week, and I was like, damn, how am I on a third strategy here? How am I on a third strategy in like 3 weeks? What's going on here? And so anyway, it was a strategy that just it didn't fit with the working week I had, and the life I had. So I traded it for like first 3 days of the week, and I was like, first trade was a win. Second trade was break even. Third trade was a loss. Fourth trade was a loss. And I was like, okay, this is and it just wasn't sustainable because of the way that it was structured. And I was like, I can't do this. Anyway, he sent me another strategy. So he sent me one last night and said, do this one instead. I'm like, I don't need more strategies. This is what's screwing me up. But I'm gonna backtest this one and see how it goes anyway. And hopefully, things can start turning around. But so I sort of go from boom and bust. And I hate saying it anymore, but I feel like I'm on the cusp of breaking it. Successfully having a consistent string of trading. But every time I say that, it just always it doesn't. And I have a little spike, and then it sort of peters off. So I've stopped saying that now, and I actually just love it now. So I don't really care, right? I don't really care. And I'm going to keep trying, and I keep trying stuff. And so that's my week. So I prefer to look at the charts on a regular basis, either 4 hour, that kind of time period. Sometimes I'll go 15 minutes and space out the week like that. And then outside of that, I'll be building little algos that are either semi-automated kind of alerts or sometimes fully automated, or I'll build it I'll build it fully to see what it does and then use that as a back test. I prefer to know what the actual strategy is likely to do versus just going, oh, I've seen the strategy online and I'm just going to build it out, which is kind of what we do in the Robot Builders Club with the building the bots and stuff. So yeah, that's most of the week is literally building bots and looking at the market. Part of the week is trading up. So that's how it's structured.
Well, we'll talk after this. I'll give you a good strategy.
Yeah, thanks for that, mate. Yeah.
Yeah. Well, the funny thing is, I think he's actually been on your channel as well. There's a guy who's got a really good strategy that's I've been checking out myself, because the strategy that I trade really works. But I also sometimes get shiny object syndrome. But to a greater degree, I stick to what I do and what works.
I was going to say, well, I mean, the other thing is the other thing that has always sort of held me back is the fact that I've got this trading channel, right? I've got this trading channel, which in itself means I can't fully give my attention to trading, which I think is one of the big things that the people who make it in this, like, for example, like my mentor, that's all he does. It's difficult running a trading podcast and having this sort of presence in the trading space, but I can't give my full focus and attention to trading. And then, I mean, everyone expects me to be the sort of super whiz kid trader, but the reality is the super whiz kid traders are the ones that just spend all their time trading, or when they start trading, that's the only thing they do. And that is, and I was just saying, my mentor, it's literally, he's going to spend 8 hours, if not 12, on the charts every day, either back testing, trading, looking into different kind of strategies, ideas, concepts, etc. That's all he does, and that's why he's so good. And I'm balancing out like 50 things here, and it's not conducive to good trading and good trading behavior. Things like, okay, I should be looking at the charts 20 minutes ago when the spreads have dropped to see what setups there are, but I'm here talking to you. So it's like, where's my priority? So my priority isn't at the markets at the moment, right?
So essentially, I ran into the same problem recently. Just purely, the thing is, before obviously I started social media, which was, started taking off on social media, which was literally towards the beginning of this year, I had all the time in the world to focus on being on the charts. And that was when I was the most profitable, to some degree. I mean, now I kind of had the opportunity to flex my flex is a bad word, but I leveraged what I had a lot better now. So I was able to buy bigger accounts and make more on those accounts. But I would say in terms of percentage wise, my profitability prior to my success, well, somewhat success on YouTube and other platforms, and I started being more active on social media and starting this channel and that kind of stuff. I was making more, and that was just purely because I had more time to focus and more time to hone my craft, essentially. And so I ran into that same problem recently, where I'm focusing so much on creating content and making sure that everything is right, and making sure that the content that I put out is good, that I'm missing out on trades, and I'm missing out on refining what I'm doing. And so that's when I started to. So the strategy that I've traded for the last year and a half, and that works. I mean, it's refined to some degree. It's generally on the lower time frames. We're looking at like 5 minute and 1 minute. So entering on that isn't always practical, especially when you're so busy. And so for me, I recently pivoted to higher time frame trading. So I'm trading more, 4 hour bias, and then we're looking at like 15-minute entries. And so that's what I trade. That's all I trade. But I'll point you in that direction. It's actually based on someone who was on your channel.
I think I know
it's
you're
a
talking
really,
about.
really good way to trade.
Yeah.
It's a really, really good way to trade. And I recently started I started, firstly, I tested it over a long period of time. And then I started implementing it live, and it really, really works,
Mm.
especially for people that are really busy. Um,
He's
I feel
actually
like it's a
he's
good
actually
balance.
we've got a video that he's recorded, a
Mm,
back test that he's done. I think it was like from July or something, and it did about 20%. I think I know who you're talking about. It's not on the
mm,
channel yet, but it will be on the channel soon. So
mm,
that's and yeah. So you're gonna get to see that, and yeah, kind of is
mm.
quite amazing how well it works. So yeah, teaser there for
Yeah,
everyone. Head over to Trading Nut if you're not watching it
yeah,
already.
yeah, yeah,
Yeah.
yeah.
So yeah,
Yeah,
'cause,
well,
I
it's
mean, like the higher
interesting.
time frames does help with, and it look, I'll be honest, years, and for years it took me ages to even look at a 4 hour time frame because I
Mm,
didn't think it was like, I was like, 4 hours is so long, but the reality is once
mm,
you do it, you realize that 4 hours isn't that long. And in fact, you got opportunities happening all the time, and so it's not this sort of like, oh, the 4 hour time frame or anything higher. Even 1 hour, I was thinking at points where it's like 1 hour is just like, oh, I've got to wait 60 minutes. Really? 1 hour's just go like
mm,
that every day. I mean, and I don't know if there's anyone else out there who's sort of thinking that, where you're sitting there on the 1 minute time frame, 5 minute, and you're even thinking the 5 minutes too slow. When the reality is,
mm,
if you actually just try it, and it took me forever. I don't know why. You'll find that it's actually not that bad, and
mm.
it can be quite conducive to better trading because you got more time to think.
Yeah, I think that the strategies that are on the higher time frame, especially if you are busy, it just works out so much better than trying to constantly be on the charts, or even if you're setting alerts. I just think that it forces you into this mentality of, oh, I just missed out on that one trade that was profitable, and now I'm probably going to take a loss. And I just think that it adds so much to the FOMO aspect of
Yeah,
trading that psychologically it's just really, it's really tough. Because I've been there, I've traded the 1 minute, I've traded the seconds time frame, I've traded all of the different time frames you could imagine, and I feel like 5 minute, 15-minute entries is a nice place to be. And then you look at maybe one, maybe two other time frames on the higher time frame, 4 hour, 1 hour, and that's it. So yeah, I mean, it's difficult when you start creating content. It sometimes becomes kind of like all consuming, and it's difficult to balance
yeah,
trading with creating the content. And that's what I recently started to struggle with, especially with the way that I was trading for so long.
yeah. Well,
And
imagine doing
it's
it
difficult because what I
from the outset when you haven't actually. I mean, because the whole point of me doing the content was to go, well, if I can find out some traders who know what they're doing, then hopefully that's going to help me out with the trading. And
Mm,
the downside of that is it's become all the content. It's all about content, right?
mm,
And so that's like, I'm just trying, I'd say probably in the last couple of years I've tried to sway that across so that I do spend more time on the trading and less time on not less
mm,
time on the content. The content's just more efficient. So in theory, yeah, less time. But yeah, but even so, even doing that, it's still a distraction. It's still, there's always something that I have to do before the trading takes precedence. So, for example, I'm doing this when I was like, my plan this morning was to go and back test this new strategy and actually see does it work or not. And I got 3 trades into the
mm.
strategy. It actually looked pretty good. Um, but that's the 3 trade back test isn't enough for me to get confidence in terms of going forward with it. So,
Yeah.
so yeah, it's definitely a hindrance if you are, I mean, advice for anyone out there, if you're looking to trade and you're thinking, well, I'm going to do it because I want to get a YouTube channel and sell courses or whatever it is, then you're probably it's going to be detrimental to your trading. I mean, maybe tracking your journey,
Mm,
but don't spend too much time doing the content. That's probably the main thing there.
mm. Yeah, it's
Yeah,
interesting. It's interesting. I think a lot of people get lost, and then they get lost in kind of like building an influence rather than building a skill that they set out to go and learn. I was lucky that I kind of conquered that to some degree before I started. So yeah, I was lucky in that regard. But I wanted to ask you as well, before we start to kind of wrap up, I really just wanted to ask, um, when you started trading that, obviously it was probably a bit more of like a slog. I mean, you've done a whole bunch of episodes, right? Um, you started off doing like a bunch of different traders. Were there any traders and any particular episodes that stick out to you where you were like, okay, this is a big one? Okay, and were you like in any way nervous? And like, how did you feel having somebody really big on the show for the first time, for example? And then also, what episodes really, you know, stick out to you as ones that just ended up blowing up, regardless of
Mm.
whether it was somebody big or not?
Yeah, so I mean, like a couple spring to mind. So one was this guy who I think it was Scott Radler from CNBC. So he's a CNBC
Mm.
regular. He's on there all the time, and based in New York. And I was like, I just got back from holiday, and I didn't have the setup I've got now. I think I had to do the interview. I don't even think I was doing video at the time. I wasn't. I was just recording the audios, and I had to. And for whatever reason, my Skype had updated or something, and I couldn't connect. Or somehow I couldn't log in. It was a while ago now, and I was freaking out. And I had to do the interview on the kitchen bench, and I think I just got it working literally about a second before he joined the meeting. I just got the whole thing working. So, but I was nervous because I was thinking this guy's like CNBC, and so that was one. The other one was Tom Hugard, who took ages for me to get on the show. Like it
Yeah.
was literally almost impossible. Finally made it work, and I could tell that he was like, kind of the time was very important to him. He was on holiday, and it was, yeah, like I knew that what he was going to drop, the value he was going to drop was going to be immense because I'd read his book, and it was immense, and it turned out
Mm.
to be like an epic show in terms of not the number of people that have watched it or listened to it, because it's kind of moderate to low, but it was a 3-part series and full of absolute golden nuggets, like one of the best interviews on the
Mm.
channel. So yeah, that one I was a little bit nervous about as well. And then the one that blew up was obviously the 15-year-old Philip Bloom one, which is now, I don't know, up to 4 million views on YouTube or something. That was kind of I didn't expect that, but that was the time when I started moving more to YouTube. I just sort of decided it was Lambo Raoul on it. He was 21, and that had gone really well. It got like 50,000 views. And then I put this guy on. I can't even remember how I found him, but like as soon as that video went out, and what I did was I updated the thumbnail and title just before it went out, and I said to my guy, "Can you change it to this from whatever the original
Mm.
one
Mm.
was?" And had I not made that call, I mean, the whole like that everything exploded from that. So like that video just went viral, and still gets views to this day. So that one there just got, went crazy, crazy big that I didn't expect it would. And it was purely on the last minute call on the title change and the thumbnail change. So there was that. And anyone else? I mean, like the last one I've done with I mean, sometimes you get a good feeling that something's going to go really well. The one I did with True Lera, who was on the show just recently, like that one's gone crazy good. I didn't think it was going to be as good as it was, but I mean, I think it's almost at 100,000. The video breakdown of her ICT strategy is almost at 100,000 views, and it's only been 2 weeks. And then the
Mm.
another one the interview is even like, I think that's at 50,000 views, and it's been like a couple of weeks as well. And so, but I
Mm.
kind of knew with the interview that some of the stuff she touched on in there was critical to people's trading. So, for example, she talks about trader being a trader versus a technical analyst, right? So, a technical analyst is going to keep you in a trade when you probably shouldn't be in there, Whereas a trader, whereas you don't really know, you don't really know what's going to happen in the market. It's out of control at that point that you press enter. Whereas the trader is going, you're up for the day, you've made money. Okay, you may not made as much of your risk, but you've made money and things are starting to slow down in your direction. So just take the money and go. And her view is like, I want to become the trader more than the technical analyst. Whereas I've always been like going, well, I want to be more of a technical analyst than a trader. And it's quite a different mindset. And I think that's like a key lesson in that interview there. So yeah, those are the 4 that spring to mind.
In terms of all of those episodes, what episodes stick? Okay, how many episodes don't make it? Has there been a bunch of episodes that just don't make it for whatever reason?
Oh, not that many, like maybe 3 or 4, I'd say, haven't made it for various reasons.
Out of all of those hundreds,
out of like 300 episodes, maybe 3 or 4 haven't made it. Or there's been a few that have made it, and then I've pulled them down pretty much straight away. There was one guy that was just a complete and utter idiot after the show went live. Turned into be, I think he was like had some mental issues. And then another one that I pulled.
I actually think I know who that might be.
Oh, do you? And another
I'll ask you after.
Yeah, another one that another trader had said pull it down, and they're kind of like quite a big influencer. So I was like, you know what, I'm going to pull it down. And yeah, so there's a couple like that, and those who follow the show religiously will know which ones that I'm talking about. And then there's probably been about 4 that I haven't pushed out. One was just like a sales pitch, and kept saying the same thing over and over again. I was like, oh, this is in the show. And then another one was like, I was like so confused as to what this guy was trying to say. It was like, there's no value in here. And then like, look, even nowadays, I mean, I'm quite good at doing this now, which is if you get a guest that's just not doing very well out of the gate, but should or could or has the possibility to, and I've done this just recently, I'll just stop them and say, look, mate, this ain't working. We're going to need to, here's what you're doing wrong. You're going to need to position it this way. And usually it works. And the person will understand what they need to be doing, and things will just get immediately better. And we'll be able to start the show again, because I don't let it run too long. It's usually like 5 minutes in, and I'll be like, there's nothing here. Like, we've lost everyone already. Let's just start again. So that's what I'll do on the odd occasion. I mean, mate, I've probably done it twice. But yeah, no, I don't think I've ever like cut somebody straight out the gate. Like, oh no, sorry, I have. Yeah, I have. So whereas there was one guy, and I was like, I think we got 5 minutes in, and I was like, nah. I said, I can't remember how it went, but I was basically like, look, mate, I don't think we're going to get you on the show here. It's just not the right time for you. I think I don't know where these people come from, but they kind of, maybe their parents said that they were like great when they were growing up or something too much. But it's like,
yeah,
you're on the show here, but you're on the wrong show, mate. You're like, this isn't a show for people that have no idea about life in general. This is a show for people that can teach people other stuff about trading. So I think that one person and I can't actually remember who it was, I've said that to, and said, look, we're just going to have to cut it there, and have a great day, have a good life, and we'll see you later. But yeah, that's how it typically rolls.
What do you think about the current podcast space in terms of trading? Because recently it's kind of taken off. I mean, everybody's got a freaking podcast. 8 years ago, it wasn't like that.
Yeah.
What's your take on that?
Oh, look, I mean, I think it's good overall. I mean, the more knowledge, that traders can get their hands on, the better it is for everyone. Yeah, look, it was just, me and a few others at one point. And now, like, everyone's jumped on the bandwagon, or the prop firms have jumped on the bandwagon. Influencers like yourself, when we're doing one here now on your channel. So it's the whole sort of collab thing where it's knowledge that is good for the trader. And I think, if people find a podcast that they resonate with. I mean, the main sort of thing I think that's, I mean, this is my personal sort of opinion, but I think like don't get distracted by the drama in the industry. That's the only thing, and that's what I try not to do is get distracted by the drama in the industry, e.g., the My Forex Funds debacle. That's just drama in the industry, right? Like Newman Iqbal, who had a issue with, I can't remember which prop firm, but yeah, he had an issue, and he's been banned by all these prop firms and stuff. So that was shortly after he was on my show. But then the number of traders like focusing on that, some other guy that you don't know, who's being banned for whatever reason. And I think there was no sort of, I can't remember if there was a reason at the end, but like all your attention's on that, right? Like it's almost like the problem I've got around not being able to concentrate enough on the actual trading because I'm producing content. I mean, other people are out there concentrating on, I'm going to write this YouTube comment and it's going to be like well thought out. I've spent 20 minutes doing it. Here we go, bang. And you've put a comment on a video when you could be doing something else, or you've slagged someone off on a video when you could be doing something productive, and you get caught up in the drama. And I think that's my only sort of outtake from this is like, with all this content around there, you still got to keep your single focus of what am I doing this for? I'm not doing this to get caught up in the drama. I'm doing this to become a better trader. And that's how I sort of, structure the whole of Trading Nut. And so, I'm not going to put a video out there on My Forex Funds because it's just not what I do. And I'm not going to like, I don't actively go out there and try and get on podcasts and stuff. I mean, I might do this in the future if there's some reason to do it. But at the moment, I'm not trying to, I don't want to get involved in the drama. I'm not there for the drama. I'm there to help traders become better traders. And that's kind of it. So yeah, that's what I sort of think is like, just focus on the learning, folks, and try and stay away from the drama and, the intrigue in the industry.
Yeah, some really, really good advice. Really, really good advice. I think everybody should really take that to heart and actually implement it because it helps. It helps. Just focus on your own lane. Cam, thank you so much for being on with me tonight. I really appreciate it, bro. Really, really appreciate it. I think a lot of people are going to learn a lot from this conversation. So thank you very much for being on, man.
So look, thanks for having me. And yeah, folks, you know where to find me, Trading Nut. So yeah, thank you, Ethan. And I know it was late for you, so thanks for staying up so late as well.
Yeah, no worries. So yeah, thank you very much, Cam. So everybody, that was Cam from Trading Nut. So thank you very much to everybody for watching this. I'll see you in the very next episode of the Fair Value Podcast. Cheers, everyone.